Hi, this is GBPUSD pair, and today it's 22nd of May 2013, and the time is 7:46 GMT. I'm using the Ichimoku Kinko Hyo system, and I'm looking at the M5 chart. The turquoise line you see here is my entry, my short entry on the pair. But let's have a look. Let's take it from the smaller time frame. We see on the M1 chart, 1 minute chart, that we had this reversal, and the pair went up, and now it goes strongly down. And we're going to have the leading Kumo is a flat bottom belly up Kumo, which is a bearish formation, so we expect a newborn clearly bearish Kumo to be formed here. On the M5 chart we see that although we had a bottom, a belly down Kumo, which was a bullish formation, the leading edge of the Kumo is not going to close here, so it may turn downwards and give a new continuation to this bearish Kumo. Chikou span, the green line, has just gone below past price action and straight down. Prices touched the Kumo and reversed. We get a 100% bearish image from M5 chart. M15 chart, the leading Kumo, although we had horizontal formation of the Kumo for a while, that showed indecisiveness in the market. Now we expect the price to go down because the leading Kumo gives a bit of a sharp edge here. Maybe it will go sideways for a while, but the axis of the leading Kumo, which is bearish, the axis gives a slope downwards. So always pay attention to the geometry of the chart. The Chikou span, the green line, is definitely below past price action. It was going up and now it's turned down again. Let's go to M30. M30 chart, we had many attempts of the price to go up in a correction, but finally it looks like it will prefer the free open space downwards to move. The edge of the leading Kumo is bearish. It's not as sharp as we would like it to be, but nevertheless it is bearish. Chikou span is below past price action, although it had turned upwards and it was touching the price for a while we had all this sideways movement. We expect it to continue downwards. Similar picture on the H1 chart. We see that the leading Kumo is bearish. It had a flat top belly down, which is a bullish formation because the price tried to reverse, but it is not going to be completed and closed up here. So the Chikou span A may not make it up here. It rather looks like it will go downwards here and it will form a sharper, an even sharper edge here. So we keep our eye on this edge. If we don't want to enter now, we wait for this edge to become sharper. The same here on the M30 chart. On the H4 chart, 4-hour chart, the leading Kumo is bearish, a heavy, big bearish Kumo, and its edge is becoming sharper, pointing downwards. So we have strong bearish biases. Of course, everything looks bearish here, but we want to avoid moves like this because they will cost us. They will have a cost, uh, and at a time cost and a money cost in case we have not placed our stop in the right position. So we want to make sure that it will rather go down than up like this, even if we know it will reverse downwards. Okay, so the edge of the leading Kumo is pointing down here. It's sharp pointing down. If you want to wait a bit, wait till the H1 chart gives a sharp edge pointing down here. The M30 chart gives a sharper edge pointing down, and you can enter then. Now, the daily chart. On the daily chart, we see that after 1, 2, 3, 4, 5, 6, 7 days inside the Kumo, the pair looks like it decided to go south. So you see that the leading Kumo formation has a curve upwards, and we just had a successful bearish crossover between Senku span A, the borderline, the upper borderline of the Kumo, and Senku span B, the lower borderline. And this cross gives birth to a new bearish Kumo. It is very, very small here, but it has been formed. So things look bearish here, although Chiku span is below past price action but inside the Kumo, which makes this signal weaker. We haven't a proper bearish Kumo breakout yet, which makes things makes the picture weaker in terms of bearish sentiment, market sentiment. Again, if you want to wait, a good criterion might be the Kumo breakout on the daily chart. Once you see the Kumo breakout happening, jump in short. But if you want to enter from now, you can enter from now, but you could just risk the possibility of the price to start making such moves for the next couple of days before it finally decides to go down. So it's up to you. It is a market. It's an ocean. We can't be 100% sure of its intentions. We just can say to which direction the biggest odds are. Right now things look bearish. On the weekly chart, we see that there is an effort for a bullish reversal, but the leading edge of the leading Kumo is not confirming this curve. It's rather turning down, so it will rather form a continuation of the bearish Kumo. So I'm recapping. M1 bearish, M5 bearish, M15 bearish, M30 bearish, H1 bearish, H4 bearish, daily bearish, weekly bearish. So you can enter from M15 and you can monitor your trade from all the other time frames. Always watch what is going on, especially have a look, monitor the smaller time frames where the trends are born, and once you see clearly bearish Kumo hanging down here on the M5 chart, like this one on the M1 chart, you will feel more confident. Okay, now stop placement. On the M15 chart, you can place your stop a few pips above the the upper border of the Kumo, but there is a risk to be hit. So go to the M30 chart and see if your account tolerates the placement of the stop above the upper border of the Kumo here. If the distance between your entry and your stop placement is less than 3% of your account's equity, that's fine. Put your stop there. If you can put your stop on the H1 chart, and you can place it a few pips above the upper border of the Kumo here, or even better, above the upper border of this Kumo here, the bullish Kumo, that would be preferable. Again, it's up to you, up to your account's tolerance. If the distance between your entry and your stop is more than 3% of your account, forget it. Go to a smaller time frame and find a significant level where odds are that it's not going to be hit, because if it is hit, it means major reversal, so you should definitely be out. H4, the only significant resistance level we can put our stop here is above this. We can put it a few pips above this point where we had the lower high, the last lower high, or even better, the previous lower high here. But again, this distance may be huge for you. Check out your account's tolerance and make your decision about the stop placement. And of course, you trail it. You trail it manually as the pair progresses. If you choose the lower high option, then you trail it, placing it above the newest valid lower high every time when it is formed. If you pick the Kumo option, then you follow the Kumo, the upper border of the Kumo, and you stay true to that, because having a Kumo breakout to the opposite direction, it means definitely reversal, major reversal. So for your stop to be hit, we should see a major reversal, and in any case you should be out. So that's for now. Price will make some ups and downs. This is it. Thanks for watching and happy pips.